AMG family, Mondo here. Hey, just wanted to make sure real quick before we get started that you guys have subscribed to the AMG podcast channel. Go below if you can't see it, look a little, scroll down, whatever you got to do. Hit that subscribe button. It helps us immensely here at the AMG podcast. The second thing we need you to do is turn on your notifications. That way, anytime we drop new content, you are the first to be notified. That way we can grow together. We can learn in life together and do life together. All right. So with that said, let's get to it. Hey guys, so we're going to talk about something fun today and look at a little lovely list of topics we're going to be coming with over the next few weeks. But today we're going to dive into 3 ways to leverage an IUL, an Index Universal Life Policy. 3 ways to leverage it. Now, let's say, that it is, built the right way. It is funded the right way. Okay, let's talk about that. It's going to be funded the right way, built the right way for these specific reasons. Okay, so I do want to qualify that. All right. So now what I'm going to say, these 3 ways, it's not necessarily for everyone, but it's for those who can afford to play at this particular level with an IUL built the right way for the intent, right? Structured the right way, funded the right way. So I got to keep saying that because people will hear this and pick it apart. So, all right, here's one popular way that now, I'm not going to talk about y'all and what y'all should be doing. I'm going to talk about the ways that I have helped, we as AMG and Associates have helped our clients with these 3 different strategies. So this is not my opinion. This is fact. All right, cool. So number 1 is for retirement. Number 1 is retirement. To build a tax-free retirement for our clients using an Index Universal Life Policy. We're not going to get into the nuts and bolts of the design and all that, but I will go on some high-level stuff. So we have some clients that have, pensions, that they're building right now, their current jobs. They may have a 401k at their current job or whatever they have going on, 403, TSP, whatever, right? And they've got it rocking, but they're not that confident in their pension being able to support the lifestyle they want to live in their golden years. Okay. So, and there's a lot of different examples of that. But one in particular, a young lady that wasn't confident that her pension at her job was going to, cut it when she wanted to retire and give her the kind of life that she wanted. So we had a plan. It's actually a couple of layers of this, but the part we're in right now is that, excuse me, she is going to use some other extra money that she's got going into savings accounts and different things. And she said, instead of putting it there, I want to put it into an IUL and I want to grow a tax-free retirement within this policy. So I'm going to just start pumping this thing with money. We built it appropriately, okay, to where it has the capacity to earn that. Has great cash accumulation. We didn't sell her too much insurance, provide too much insurance. We have it at a good amount to where she has a capacity to fund it properly up until that point of time to take withdrawals. So that is a common one that we structure for people, and there's some intricacies or whatever, but that's the nuts and bolts of it, right? Is retirement. So that is a feature. Now, what she loves about it, because of the IRS codes and the tax citations, TAMRA, TEFRA, and DEFRA, the codes 101A, 72E, and 7702, we are able to build this policy to where it can be tax free. Okay, it's tax advantaged. All right, it's a tax-free vehicle when it's played the right way, structured the right way. So that's a common strategy for people who say, man, I would love to have X amount. Like, for instance, one client, she's pulling $100,000 out of her policy a year, starting at age 65, till age 100. And we got to fund it the right way, structure the right way. It doesn't lapse out and all that other crazy stuff that people talk about. No, it's built the right way and it's sustained throughout her years, okay, up to 120. All right. So with that said, that's one popular, if you're looking for that strategy, one popular strategy of retirement, tax-free, built the right way, funded the right way, and that's what it's for. All right. We can help you with that. All right. Because we've done it several times. Another way that we've helped our clients, the second way, is what we call project funding, okay? These are for individuals that are maybe contractors, or real estate investors, entrepreneurs, movers and shakers. They are playing chess with their finances and with their capital. They're doing different things. They're creating cash flow assets. So we have a way of designing an IUL to where it meets their needs of coming and going and regarding leveraging the loan feature, creating cash flow assets, creating that cash flow, putting money back in the policy, basically, using it as their own funding versus having to go to a traditional bank or credit union. All right. So we've constructed those types of plans for people with an IUL who are looking to move and shake. Now, it takes a certain level of financial acumen and discipline to do that, okay, and understanding, and also taking the advice of those who are helping you with it, meaning in our cases, us, to say, hey, you know what, here's the limits, here's the benchmarks, whatever, here's what we want to do within this time frame, this and that, because you're playing chess with it. You play it close to the chest. You're not just taking money out and going to, buy a building and just kind of hope and wish for the best. There's a strategy that we actually walk you through and we play along with you, basically as your assistant coaches, if you will, or your coach. All right. So project funding, that's a popular one. And another one that we use, obviously there's legacy and all that, but this one's pretty cool. It's for kind of two purposes in regard to income. Okay. And I don't mean retirement. I mean replacement income, or even using this policy as your own unemployment, if you will. Right, your unemployment insurance. So one aspect is popular, obviously, is income replacement. So you pass away, you replace the income that your spouse lost with your passing. That's okay. That's normal. But there's another opportunity, because we've had this set up before, where this individual's vocation is very volatile, right? So they're like moving around different places, different jobs, this and that and the other. And he said that, there's some times where I could go without a job for, 2 to 3 months until I get a new contract. He's a contract worker in some huge electrical, situation. He gets flown around different places of the country and in the world doing things. So he's like, it'd be nice, even though I make great money, but to know that if, the crap hit the fan and I'm off for a long period of time, I can still keep the lights on. I can draw from my policy and have that as my own, unemployment check, if you will, to keep the lights on until I get the next gig. So, and of course, there's other plans of what to do with his funds and investing and growing his money and all that kind of stuff, not just within the IUL. We got some other stuff too, but that's one particular idea in regards to his IUL. He's using it as an oh crap fund, so to speak, if he needs to keep the lights on, if he's in between jobs. So think of it as his own unemployment. So those are three strategies that we have helped clients with. So this is not theory. This is not something that I'm just reading a book or just say, hey, this is what you need to do. No, these are things that we have done. And people are enjoying it. They are leveraging it that way. They are rocking with us. And that's key. I will say, if whoever is helping you with these strategies, whether it be retirement planning with an IUL, maybe you have an additional, annuity or two or whatever, and some other financial vehicles. Maybe you've got an IRA with this, that, and the other. Maybe you got a 401k or 403. I don't know. But make sure you have an advisor that knows how to piece all these things together to maximize your growth, maybe even minimize your tax obligation. It increase your stability and make sure that you have sustainability throughout your retirement years and your funds don't deplete. So you have an advisor that can walk you through that and understands the language, understands how to put these pieces together for you. All right, and then also on the project funding, that's a fun one where you've got the movers and shakers. They're not retiring; they're trying to get after it. Right, they're creating cash flow and they're doing what they got to do, moving things around. And so as an agent, you got to know what you're doing, understand all the parameters within the IUL with that particular carrier, not just in general IUL, but that particular carrier, that policy, and how it was written to make sure that you're advising properly. And then thirdly, with the idea of setting someone up of just kind of set and forget it, pump some money in there, get your cash accumulation going, minimum face amount, get that cash accumulation really kicking, all that good stuff. And then that way, if they need to pull from it with the oh crap moment of, oh crap, I need to pay the bills because I just got laid off and I don't want to dig into my nest egg. I don't want to pull from these other accounts. I'm going to get a penalty. I'm going to get taxed on this, Oh, you know what? Let me go into my IUL. That's tax free. Let me go ahead and get a loan out of that or withdraw, whatever makes sense at the time. Take care of my bills, do what I got to do and keep it moving. All right. So those are three different strategies that we have helped people with AMG and Associates. And I hope that helps you. Here at the Safe Money Playbook, we want to make sure that you understand the plays. So that way, if it makes sense for you, you can go out on the field, you can get some positive yardage and help you keep your money safe. All right. So I appreciate you. Love you. We'll see you next time. Y'all be easy.